Good morning, ladies and germs. Saman from Owls here. We are going over our recap for day one of our $2,000 swing trade. And yes, I look stoic like this for a reason. I do not want to show my face, but I will give you the honest results. Before we get into the video, be sure to smash that like and subscribe button. We want to continue pumping out content for you guys. And if you haven't, I don't know why you haven't, definitely join our Discord channel. It's absolutely free for 7 days. You'll have access to all of our channels, our live alerts, our live voice chat, and everything in between. I gotta say this too, this is not financial advice. This is just for entertainment, and I hope that you are entertained. So, I did a whole spiel yesterday on why I swung SPY puts. Now let's see what the result is. This is where we ended off at, okay? This was after hours. In retrospect, boom! Look at what this thing did. The market closed yesterday at about 234.40, opening bell at 438. It made a 4-point move and it hit a high of 441.68. Needless to say, we literally immediately stopped out. Like, boom, gone, done. And we lost about 30% of our account. We started at 1900 and right now I think we're at like 1300 something. I'll post it somewhere in here. But I want to show you guys where my rationale was wrong and why you should not be following the type of mentality that I had coming here. It was a little bit of a desperado move looking at it in 2020 hindsight, but let's see what's going on. First thing is, you never want to swing anything based off of the daily, and that's exactly what I did. I saw this little lull right here, not on the daily, excuse me, on the minute time frame. I saw this lull, yep, there we go. I saw this lull right here. I saw the bearish momentum coming in, and I thought, okay, let's do a put. As I mentioned yesterday, we saw what was happening historically with SPY the past couple of weeks. Is that towards the end of the day, the last 30 minutes, it just takes a big poo-poo to the downside. I thought that I wanted to catch that. So I did that and I told myself, you know what, I'm going to swing, so I'm not going to put a stop loss on it if it goes a little bit higher today because I was very confident that it would go down today. What are the faults there? We're going to get into it. The very first one is I didn't set a stop loss and I justified it by saying, oh, well, I'm going to swing this until tomorrow. I think with such a volatile stock, or ticker rather, like SPY, or any ticker for that matter, you always put your stop loss. You live and die by your stop loss. Problem number one, I didn't do that. Reckless abandon. The second major problem is that I based my decision for a swing on what I thought to be a trend in historics, when in all reality, all of the signs were pointed in the other direction. I'll show you what I mean. Let's look at this thing on the daily. If we look at this thing on the daily, look at the TTM squeeze, look at the volume, look at the past couple of days. We see this triple bottom form. And I already drew this out, but I'm going to draw it out again so I can illustrate what I'm talking about here. So go to drawings. Let me get a nice little circle going on. Okay. Here's one bottom. Here is two bottoms. Here is three bottoms. We have this triple bottom and we have momentum swinging from bullish to bearish. This is on the daily of all things. So this is a very good indicator that we may be reversing into a bullish trend and there's a gap to be filled. This is the gap to be filled, and we were inching where that gap needed to be filled in. Matter of fact, that's exactly what it did today and some. So slap on the wrist to myself for that. So the first one is I wasn't looking at what's really going on and zooming out. That's just a daily too. Now let's look at the 4 hour, let's look at the 1 hour. Let's keep on continuing this process so you can ingrain in your head what you need to be looking for. You could see that there's a ton of bullish momentum on the 4 hour as of yesterday once it popped out of this triple bottom. And a triple bottom, if you guys don't know, is a common candlestick pattern where if it bottoms out 3 times, you are likely going to see an upside. And I want to show you this right now. I'm going to draw it out for you so you can have a perfect illustration of what it is that you need to be looking for. And again, looking at the candles doesn't tell the full picture, but this one was really like screaming at me. So this came down, then it came up, then it came down, then it came up, down, and now the momentum is going all the way to the upside. It broke 2 major resistances too, one at 435.54 and one at 437.11. It broke both of these in after hours. Mind you, I was asleep, but that's what happened, and it just shot up today. And now I think that we're going to be headed in a bullish direction. So shame on me for doing that. These are the lessons that I want you to learn, and these are the things that I want you to look out for, because if you don't, you are going to shoot yourself in the foot. That's the opposite of what we want to have done. We don't want you guys to be in a position where you're making willy-nilly decisions. Let me make those stupid decisions and let you learn from them so it doesn't happen again. Thankfully, everything is all good in the hood. I did hit my max loss for the day, so I didn't trade today, but I do want to show you guys some tremendous plays that were made. The first one is by Elkin here, where he did a 441 call at a strike price of 1.7. Bought 6 of them, sold it at 191, then sold at 199, sold at 206. This ran up to about 270 at its peak. But again, we are not greedy. We don't want to leave these things to go up and down, round and round. We understand how volatile S&P 500 is to begin with. And with SPY, you take profits when happy. If you have profit targets, take them. I would have loved to play this play. I actually had it set up in my TOS, so I do it, but I didn't because I have to stick to my rules. Do not trade after you maximum loss. My max loss was $200. We were at 400. Literally the first second that the market opened, we stopped out of both of them. So what are you going to do? The good news is tomorrow's Casino Friday. We're very excited to trade. Everything is 0 day till expiration, of course, unless you want to get longer expirations. But this is where you can lose a lot of money or make a lot of money at the same time. And it's one of my favorite days to trade. And I hope to share that with you. And we're going to get it going. Here's a recap. Here's the honest truth. We're down 30%. We're about like $1,350 out of the $2,000 that we started with. But we are not discouraged. We learned our lessons and we get to go back tomorrow. The beautiful thing is the stock market's going to be there. Whether we're not there or whether we are, the stock market will be present and it's going to do what it wants to do. So there's always a new day. There's always a new opportunity and we're going to get after it. Before I go, again, like and subscribe. Like 90% of you that watch these videos are not subscribed. So like it, subscribe to the channel. We're going to be pumping out content every single day and be sure to join our Discord. It's in our link below, absolutely free for 7 days. You're going to make, well, I can't say you're going to make a lot of money, but you will have the opportunity to do really well. And I hope that you do really well with us. All right, everybody. I'll catch you tomorrow. Hopefully it's a better day. Bye.